Episode 119 of the weekly tax update for March 27th, 2026. Lots of things happening, right? Palm Sunday, Holy Week next week, Passover, and Easter all coming up very quickly. And it's inside of tax season. Rare that that's inside of tax season. I want to remind you, though, we are all in this lifeboat together, slowly trying to get to April 15th. And so far, my boat hasn't sank. I don't know about the rest of you, but we're all there. We're all going to get there. 19 days left, I think, right? It's supposed to say 19 days on the slide, and it doesn't. I was thinking of all of you last night. It was so late that I typed a few things to Ellie, and I used the wrong name on a couple of things. And she's like, "Did we change the marketing?" I said, "No, I need to go to sleep." But if you're looking to get a hold of me, scan this into your phone. That's my details. By all means, you will get my phone number, my email address, and the office number here, whatever you need to find us. If you're not a subscriber, you should consider becoming a subscriber for $52 a month. We get 24 or so hours worth of new original live content by a variety of speakers. Hopefully, none of it's from me. Hopefully, it's all the good, smart people. And there's 150 to 200 hours of 150 to 200 programs, about 300 hours of recorded content that's all valid for continuing self-study, continuing education. So by all means, please join us as a subscriber. The price is going to go up after April 15th for new subscribers. That price is going to go to $57 a month for new subscribers. So you want to take advantage now, get in at the $52 price. It's that price for life. We still have folks that originally joined us 6 years ago at $47 a month, a lot of people. So by all means, we don't raise the price once you're in. Membership has its privileges. There is also currently a savings. There's a $200 fee to sign up, one-time fee. And that's half off right now if you use Last Chance 50, Last Chance 50 at checkout. So please join us. We'd love to have you as a member. Membership has its privileges. That will included the 250th anniversary mid-year tax update with AJ. I don't think he's going to wear that suit, although I offered to buy it for him. That's already scheduled for June 30th at 1 p.m. AJ's going to have 3 hours of content for you right before you leave. It's the Tuesday before you leave for 4th of July break. So join us. This fall, the 13th annual International Tax Conference is October 26th, 27th, and 28th in none other than New York City. Please join us. We'd love to have you there. Early bird should post next week. Our super early bird, the super early bird price will be last year's price. So if you want to get in at last year's price, you'll be able to register early and get a spot. Let's look at where the IRS is with their numbers. I must say they've been getting better with giving me more timely numbers. I'm very impressed with that. Where we are. So in the last 5 weeks, there's been no change to identity theft processing. They are stuck in July of 2024 for individual returns and October 2025 for business returns. As we are just about to hit April, that's going to put us, 21 months, 22 months behind. That's outrageous. I know you were going to get lapped and get to 2 years. It's just going to be completely outrageous when that happens. So where are we with 1040 processing? The usual stated, we're processing everything we receive electronically within 3 weeks. Okay, great. But what about stuff we submit on paper? Allegedly, paper returns, they're processing the March returns now. Amended returns, they're processing the January returns. But they put that big star, that caveat that says, unless it requires special processing or a person. And then it goes into that bottomless pit that's anywhere from 6 months to probably a year right now, if it doesn't get lost. So try not to have to amend a return if you don't need to amend a return, because that's where we end up with this stuff. Electronic return, business returns processing within 21 days, but paper originals for Form 1120 are being processed from March. Amended returns are almost a year back, June 2025. Again, if you don't have to do paper, don't do paper. Form 1041 processing has not changed or been updated in 8 weeks. They are processing February 2026 returns that are paper filed and May 2025 amended returns. Now, I don't understand what's going on in the POA department, the DA, right, Disclosure Authorizations Department, because they seem to be a yo-yo of up and down and up and down. Last week, they had gone up 4 days, from 5 days to 9 days to process, which was starting to get unacceptable. All of a sudden, it's dropped down to 2 days, dropped down by 2 days to 7 days. And I have to tell you, we did see that things that went in last Friday and Saturday were available this morning. So they are accurately processing at 1 week right now. Nothing else has really changed. W7 processing is back in February. That's not too exciting that they're starting to get behind. 8802 processing has been stuck in December. That's normal for this time of year. And 1045 and 1139 tentative refund processing dates are listed below. Employer identification number remains solid at 8 business days for processing, but I have to tell you, we have been calling 1 week to the day after we sent it. And I have to be honest with you, I called today for 1 cent last Friday. They gave me the number over the phone. So we're all set with that, with those particular folks. General correspondence is progressing a little bit. The mail received in December for individual returns is being looked at. Mail for corporations is all the way back to June. That's not too exciting. Other correspondence is back to August. So, good Lord, you could be sending in a letter about something and they'll send you 2 or 3 additional notices before they even open your first reply. The IRS is broken, boys and girls, and I don't see anything coming in the short run to fix it. Keep e-filing. Don't paper file. Do your best. And we keep saying this, the 21 days for paper, 3 to 4 months or a year on anything that's paper filed, not e-filed. So let's look at where the IRS results are for the filing season. I haven't been doing this for a couple of years. We used to always do this, and I stopped because I'm reading you a chart. But if I can give you some analysis, I think that might be useful to you. Now, because of the way these things report and get processed, they're always a week, usually 2 weeks behind. Now, on Monday, the data through the 20th will be available. So, we end up being 2 weeks behind. So where are we right now? As of the 13th, they had received 69.7 million individual returns. Is that good? Is that bad? It's down 0.9%. The average refund is up 10%, though, to $3,600 from $3,200, $3,300. Overall refunds are up 12%, and 54.3% surge in visiting irs.gov. Well, one of the mysteries here is why. Well, first, the IRS has been trying to drive people to do more and more things electronically with them. But I don't know, if I can't get anybody on the phone, I'm going to go to the website and see if I can get help there. So I think that's the issue, is they're not answering the phone. Folks are headed there to try and get help. So what does this mean, though? This means that return volume is essentially flat. The 0.9% drop, 69,000,007 this year versus 70,370,000 last year. So 68,816,000 have been processed, which is down 1.1%. I don't know that that's a meaningful number in any way, but it's something that they share. Now, officially, the IRS is saying there's no structural shift in behavior to indicate why this is happening. I will give you my 2 cents. Undocumented folks are scared. They're scared to file. They're not getting refunds. They're not getting as large a refund as they used to. They're concerned that their address and other identity is going to be shared. For decades, we've said to people, the IRS isn't immigration, isn't ICE. They don't care. They're not going to share the data. That's not true anymore. So I do think that people are less likely to file. And at some point, the Center for Taxpayer Rights, someone will end up doing an analysis and coming back and saying, yep, that's why it's down. Those folks didn't file. Those that like a graph, here's the graph outlining another change. So of those 68,997,000 e-filed returns, it is up. But again, we've said returns are flat overall. But look at the composition. It's shifting. E-file is up. Self-prepared is up a lot. And tax professionals are down. So we're up 0.4% on e-file, but 1.9% of that, 1.9% increase in self-prepared and a 1.2% decrease in tax professional volume. What does this suggest? It suggests that people are using internet, website, they're DIYing stuff where they can. Now, is that a trend to move forward? Is that a sign of the economy? I don't know, but that's a difficult sign to see that self-prepared e-file was up almost 2%. Now, looking back to IRS Gov for a minute, some of their data points: 352 million visits, 54% increase. The IRS is not giving us an official explanation because I think my explanation is pretty close as to why. This is the traffic. Yeah, my answer is correct. Is that they can't get anybody on the phone. They're going to the website. It could also be folks are going to understand OBA implementation, understand my tax pro said this, and I got this answer. Now, one thing I don't know: do they know if this is people or are these web tools? Are these AI tools that keep pinging the IRS website to pull information and copy things? I don't know. Don't know. Average refund is up 10.8% from $32.71 to $36.23. Not unexpected that refunds would go up based on all of these 4-year, the Schedule 1-A stuff, right? I mean, almost every one of our middle income, not high net worth, not high income folks, almost every one of them is benefiting from one item or another or multiple, between no tax on tips, no tax on Social Security, which isn't no tax on Social Security, no tax on overtime, and the deduction for interest on an American assembled automobile. But the Trump administration had been touting a $1,000 increase in refunds. We're not even close to that. We said 352 is the number that we are currently seeing. Now, they may continue to rise as we get later in the year. I've seen a number of people with larger year-over-year differences. I've seen a lot of our seniors, that $12,000 at 12%, some of them at 22%. That makes a significant difference. We have folks that don't need to make estimated payments this year going forward because they're getting, they owe substantially less, or they're getting small refunds. Folks who came in early looking for a larger refund may call up with follow-up questions, and we're going to explain to them, what's going on, right? They may say, I didn't go up $352 and I'm better than average. What's happened? You have to explain it to people. Maybe they'll check with ChatGPT and give you a response to what you did wrong. Some scary stuff coming out on social media about people dumping their entire tax return into ChatGPT and checking for it. Someone had posted something to basically that said, we're worried about depreciation recapture. Did you get that part? And you roll your eyes, right? It's like, where are you earning these terms? But good that you're educating yourself. This is like WebMD 15 or 20 years ago, right? Let them go try and do this. Direct deposit refunds are at 50 million people, almost 51 million people, up 5% over last year. Surprise, surprise, if you tell people they have to wait 10 weeks for a check, more people will do direct deposit. I saw an item and I couldn't find it again. The number of people that are being delayed right now, I think it's at 1.4 million people that are delayed with their refunds because they did not include a direct deposit account. So 70 million returns are processed through March 13th, so it's a full month left in the filing season. There's a lot of returns that have not been filed yet. All these numbers may change. More complex returns haven't been filed. returns with all sorts of K1s have not been filed. Now, a lot of my OBA deduction people, they probably have filed. It'd be interesting to see if there are more or less extension requests this year. One practitioner complaint we've heard is that the season is contracting. Returns get more complex as people make different investments, and the reporting documents come out later, less and less time to crank out those returns. And it doesn't help that with changes to the code, come changes to document requests to the clients, come delays in them getting us all of the information that we want. Well, what I want you to take away from here is that while refunds are up, they are nowhere near what the Trump administration had anticipated. So you should think about making sure you're getting all the deductions your clients are entitled to. Something to be concerned about that we're going to watch, and I'm hopefully somebody's going to look into this. There'll be a study, a take to study something, that this 1.9% increase in self-prepared electronic returns. Remember, there's no direct file this year either. So these might be folks that are paying for a tool to do it themselves and spending their time. Be interesting to see where this trend takes us. The increase in IRS traffic is interesting. I don't know how much it affects us, but it's interesting. And to those of you that have refund sensitive practices, if the publication of some of these averages drives people to call, be ready with some sort of non-blanket, non-push you off response. Be cordial, be polite. People are taking the time to call. We used to say the person who calls is giving you an opportunity to make them happy and keep them. Give them that quick explanation and patiently answer their questions. Those 2 or 3 minutes now will pay you dividends in the future. Item came out regarding the Natural Disasters Act. So there's a gap here in the implementation by the IRS. They created this tool for themselves and then put the infrastructure in place to implement it. So let's look at this. I won't put you to sleep with it, but we're going to talk quickly about what the Filing Relief for National Disasters Act does and what the IRS has failed to do. I feel like I'm in church, what you've done, what you failed to do. We'll look at the prior law. We'll look at the changes. We'll look at why this was supposed to be a positive thing. There's some advisory risk here, clients getting the wrong information. So let's just open this up and talk about it. So this act came into law in 2025, and it was supposed to be an expansion of the federal filing extension eligibility, and the IRS is yet to operationalize it. The idea was to standardize all of this. Hey, I need this disaster in my town, this disaster in my county, and we need to give folks relief. So you gave them the additional time to file their returns and make payments and do all sorts of, everything gets extended, right? Everything that happens in between, that's due between the date of the disaster and this date later, 60 or 120 days later, all that stuff gets extended. So the expanded eligibility was going to include extensions if it's an area with a state declared disaster, not just the federal presidential declared area. If the governor declared a state of emergency, it would qualify. Very interesting to give the states this power. We were going to double the extension floor from the mandatory 60 days to 120 days. Again, for qualifying disaster areas. State and territorial governors could formally request the IRS extend the deadlines following a state-declared emergency. And that ideally was going to be rote, right? We had a tornado here. The governor and the local people know this is a tornado, maybe before FEMA and the federal government can act. Boom, let's request that extension and let's all move on. So as of March 18th, there's no guidance, nothing. So we have April 15th approaching. Does anybody have an extension? We're aware of one time, but we'll talk about that, but there's no public-facing resources here. Nothing explains how the authority works. There's nothing in the public record telling governors or state agencies how to request it. So it's super unclear here what they want done. No FAQ, No formal procedures, no framework documentation, not even we think we're going to do this, right? Now, is part of this the fact that we don't have a confirmed IRS commissioner? Nobody's been brought before the Senate committee and asked some of these hard questions. Have you looked at this issue? Are you going to do it? None of this has happened. So there's a letter, and there is a copy in your handouts. There's a letter from both Democrat and Republican Senate leaders to Acting Commissioner Bissent asking for some clarity here, reminding him these things that need to get done. And in this letter, they ask 4 unanswered questions. First, what's the submission mechanism? Where is it, guys? What do you want to know? When do you want to know it? How long do I have to ask for it? What's the IRS proposing to do to publicize this? If it's federally declared disaster area, among other things, they just upload the area codes, the zip codes, and all of those affected returns are pretty much covered. If there's a small exception, you call it in, but otherwise it's fairly automatic, fairly turnkey. What are the coordination protocols between the IRS and FEMA for these state-related disasters? Again, has anybody put this together? And then how do states and territories become informed of their authority? I think we didn't have that meeting in the National Governors Association this year, right? So, how are they all going to talk and communicate that? There was a mechanism in place to share information like this. Apparently, we don't have that right now. So the senators addressed their letter to Acting Commissioner Bissent, but of course, 5 days prior on March 13th, the 270 days that the temporary appointment can last lapsed. So he is no longer the acting IRS commissioner, but Bissent retains the authority over the vacant office, which kind of seems to be violating the spirit of the law, even though it's legal what they're doing. There's no confirmed commissioner, and day-to-day operational authority is unclear. Probably if there's something good, I'm going to take, I did that. If there's something bad, nobody's in charge. All right. Which you would think makes Congress unhappy, that they don't have the ability to point the finger and ask for help or assess blame. So, under prior law, taxpayers in a state-declared disaster area had no available pathway to federal relief. It happened a lot of the time, but it was inconsistently applied. The idea behind this act was to change this, to not guarantee, but to ensure that we would have this coverage if there's a state. If it's bad enough that the state declared an emergency, you should get the federal benefits from it. So the governor request mechanism should work like this. The governor declares a state level emergency outside of what the federal government is doing. They formally submit a request to the IRS to extend the tax relief deadlines for the affected area. And then finally, the IRS would act on it. And once the IRS acts on it, that should trigger this 120-day mandatory extension for. So it's not even going to be haphazard. How many days do I get? If it happens, everybody gets the 120 days. It's not automatic. Governor request and the IRS election are both required. It's not automatic. They have to want to do this, and why wouldn't they? So the IRS hasn't published, we said, no guidance on the mechanism, although we kind of think we know what it will be. There's no publication for taxpayers on how to notify taxpayers what the state should be doing. Probably none of the states that know about this have funded, right? You would probably start to see inserts with checks, an insert with your automobile renewal, right? All those little cards you sometimes get. What outreach is there to tell people that this is happening? There's no published federal document to coordinate between FEMA and the IRS on state-only disasters. No reporting person, no clearinghouse, no mechanism. And there's no documented process for the information going the other way, for the federal government to say to the governors, hey, we have this. When you want it, ask for it. Nobody's telling them this. So the IRS did use this authority exactly once. Last year's Louisiana winter storm relief, which postponed 2024 filings to March 31st, 2026. So they used the new law. It was implied by this Senate letter. The IRS never confirmed it. No publicly available framework document accomplished this. This shows that the IRS can move quickly if they want to, but there's no procedural model in place. We don't know how it happens. I really hope it doesn't ever become one of those blue state, red state things, right? You're a friendly state, we're going to do this. You're not a friendly state, we're not. That just shouldn't happen. So practitioners outside of Louisiana have no basis to advise their similarly situated clients. I know Lynn is on here. She and anybody else who are in Louisiana, you can share anything you want in the chat. We'll come back and talk to that when we get towards the end. So 4 pressure points on me, the practitioner. My luck, the client in Louisiana comes in and says, yeah, I don't have to file, right? We have an extension. So if there's a state declared but non-presidential disaster area, you can't reliably say they got it, they asked for it, they did it. There's no reporting, there's no information, we don't know. Since the 120 days aren't self-executing, this happened, the governor did this, therefore the feds will do that when they get around to it. No, it's still subjective. We ask, they answer. We don't have that yet. We don't have the mechanism. We don't know what's going to happen. Louisiana's actions, though, show that the mechanism can work, but there's no procedural model. There's nothing here that we can say, well, this worked. This is how we did it. This has worked. It's like your bad employees who don't write everything down. No idea how it worked. They got it to happen. No idea how it worked. And I think this is going to become a push point from the Democrats by saying that, well, if there was IRS leadership, maybe this would have gone a little bit easier. So the core problem, you get that call, my county was declared a disaster area. Did I get more time to file? Every time there was a hurricane, I did. So as of March 18th, the answer needs to be, it depends whether your governor requested relief or whether the IRS has acted on it. Right now, I can't confirm either because there's no mechanism in place. If you're in one of these areas, you probably want to monitor the IRS newsroom website to see if there's a relief notice published, right? They put them all in that one spot. Don't automatically assume you have an extension. Make sure your clients understand right away. So, right now, if I had a state declared disaster and not a federally declared disaster, my opening line to my clients might be in the communication, as of right now, your deadlines have not changed. I will let you know if they do. Make sure folks do not count on having extra time. We're going to watch for a response to the Senate letter. If it isn't exciting, we may not see it. If there's no exciting answer, if they give them, they will get back to you, or we need 90 days letter. We're documenting research. You should too. And we're looking at Louisiana as a baseline, right? So, but let's see what happens if we get these state-specific notices. All right. We said the 120 days won't self-execute. Louisiana did make this work. What don't we know and we don't know? We know the act was signed. We know the extension floor is now 120 days. We know governor's request is supposed to be required. It won't be automatic, although I can't imagine a governor not requesting additional time. Senate has demanded these answers, this bipartisan group of senators, and we don't have a commissioner, right? So we don't have anybody we can hold accountable. Things that we don't know, though, how the process is supposed to work, if the IRS will use the existing infrastructure to publish the extensions. I don't know why they wouldn't, but they might not. How are the IRS and FEMA going to work together on this? How is the reporting going to work? Who's running the IRS right now? Thank you. And then will the IRS respond to that letter? We don't know. All right. So this piece came from the National Taxpayer Advocates blog, and she took up March Madness to talk about name, image, likeness, nil income of student athletes. And this is an interesting concept. to the point that there was a joint Agostino and IRS program that was supposed to happen in January. Due to IRS scheduling, that didn't happen. It's been rescheduled, no date assigned yet because they have to coordinate all of the IRS folks. I do know there'll be a version of it, a full 4-hour panel on this at the Agostino barbecue. So if you either get yourself to Hackensack for free food and free CE on June, whatever the Wednesday is, June 25th or 26th, and by all means, if not, it'll be available to watch on video and on demand, right? We'll record it and broadcast it for you. So the National Taxpayer Advocate put up a warning and said why this matters now, just using March Madness as a tie-in, as an opportunity to tie in. We're going to talk about the character and source of name, image, likeness income. We'll do something of a deep dive into what folks are getting and how it's taxed. And we'll talk a little bit about finding who these people are and some of the takeaways. Now, I'll tell you right now, if I were in a city with a large college student athlete population that were getting scholarships or were higher end athletes, an Oregon State or a Nevada, I might want to set myself up as the expert on name, image, likeness. Make sure the coaches know who I am, somehow get into the schools, do all sorts of content on this. Why? Because keep those people happy. They become somebody making $20,000 or $30,000 a year as a student is going to have 7-figure signing bonuses when they move into into their professional sports. And you should be able to keep that client for a lifetime. All sorts of planning opportunities, all sorts of non-tax preparer revenue, helping those people navigate financial situations. Just a thought, what I would be doing if I were there. All right, so this is a month before the April 15th deadline, and she was trying to do a public warning, but also a referral so that student athletes ask for help from qualified tax professionals. So for a quick background, in 2021, the NCAA had a suit versus a fellow named Alston, and they lost. So this cleared the path they won. This cleared the path for athlete compensation. Previously, you couldn't pay a student or a amateur athlete, couldn't pay them. So the NCAA and the state rule changes permitted NIL deals. People can get money. They can get third-party endorsements, appearances, and these royalty deals proliferate. We even talked about last summer. I did a class on this, and we talked about this woman athlete at I want to say University of Pittsburgh, but or wherever she was. It was wherever Shaquille O'Neal was, and he took one look at this, and she needed a car or some nonsense. He got her a car, but boy, is that income? Where does a gift under Duberstein end and income from a professional athlete begin? And that's a whole story for another day, but it's just interesting where income arises here from these things. So there was a litigation settlement permitted institutions to directly pay athletes a share of sports-related revenue. Schools get a lot of sports-related money, right? They share in the TV pool. They share in all sorts of things, license merchandising. So most states permit name, image, likeness compensation for high school athletes. I have not seen that yet, but this is going to change that population as well. New income types, new problems, same reporting obligations. So what does a name, image, likeness deal look like sometimes? A couple of components. Travel and appearance fees. I get paid to show up for an autograph session. I get paid for a personal appearance. You're opening a new Nike store. I'm going to show up and talk about how great Nikes are. This income is going to get reported on a 1099 NEC, non-employee compensation. And if it's not, you're still going to report it as income, right? Endorsement and food vouchers. I can give you cash payments. I can give you unlimited non-cash food benefits. You want to plug Firehouse Subs for me? That's great. Here's the Firehouse card. You can go eat there anytime you want. No cash required. Just pop it right on that card for us. That food is taxable. Value of that is taxable because I received it in exchange for a service. Trading card royalties, right? I joke with Nicole. I can't wait till Alex gets into the big leagues, her son, because I'm going to go buy, all sorts of his cards and make the poor kid sign them for me along with a jersey. But no, we'll put them up on the wall. But who would have thought, right? Trading card income. This also comes in a 1099 miscellaneous. Now, if I give them cards for their collection, that's probably taxable income as well. Although, what's the card in and of itself worth when you open up the pack? When I get the card, I don't know. Is it? I guess if it was when Shaquille O'Neal started his second year as a student athlete, I guess, wow, that card had a more than an intrinsic value. But anybody else just starting out, it's probably not worth much more than the cost of the card stock. We've seen vehicle use. We talked about the Shaquille O'Neal case. I can't think of that woman's name right now. Apparel deals. So what happens here? I can give you a car. I can also loan you a car, right? I give you the Sheeley Subaru courtesy car. And, you're everywhere you go. It's got my name on the car as the courtesy car. And what do I care? You're going to get us all sorts of media attention. There's a value to that car, the least value of that car, probably. Free apparel. If you saw the movie Mr. 3000 with the late, great, one of my favorite comedians. Anyway, he was one of the kings of comedy, too, original kings of comedy. Anyway, he was also on with one of the Robert the fellow from he was in The Sopranos and a number of other mafia things. And the running joke was that he had a lifetime deal with Izod for free clothing. So all the guy wore was Izod t-shirts and sweatpants. Fabulous, fabulous stuff. That's taxable. You get it? That's taxable. So what happens here for information reporting? First, they may not get all the documents they're supposed to get. That doesn't excuse them from filing, right? You'll have to figure that out. But an athlete, by the NTA's account, could get five reporting documents. So some things should be on a 1090 NEC. Some should be on a 1099 miscellaneous. Let's confirm, especially the first year, what's where and is it on the right form so that we report it correctly. Things that are inconsistent are going to create a mismatch with IRS records. If they put it on the wrong form, you shouldn't report it wrong, but you have to be aware that you may get a CP2000 at some point. Now, there's a liquidity trap here, right? The non-cash compensation liquidity trap. If I give you use of a car, the value of the lease is $20,000 a year. I gave you something of value with no money. That $20,000 is to go on your tax return at fair market value. So I have to find other sources of funds to pay the tax or decline the car or renegotiate and say, yeah, you can give me a $20,000 car. I need $10,000 in cash for my tax bill. See what you can do. There's no methodology here that's standard. So we try to document the value other than we know it's all taxable, right? What did you get? What did you do? Maybe they should understand as well that barter income counts here too. Athletes need to retain records, contracts, receipts, descriptions of anything they received. And I don't know that any of this gets done if we don't tell them, create a log, do this. Probably business out there for somebody, create an app, right? The NIL app. Yo, what happened today? Talk to the phone. Feel free to steal that idea. So we said a large non-cash name, image, likeness package can leave these poor folks with a tax bill and no cash. Not cool. How about self-employment tax? They are, in fact, self-employed athletes with respect to the name, image, and likeness income. I know, set up an S corp. I know. Self-employment tax is going to apply here, and that's a surprise for a lot of folks, right? Net of expenses, of course. They should make quarterly estimated payments, or at least be counseled to do so. They may not. Your job is to counsel them to do it. All right. We won't really dwell on scholarship taxability, but a portion of a student athlete scholarship may be taxable, especially the amounts for room, board, and non-qualifying expenses other than tuition. And this is independent of whether they have name, image, likeness compensation. You have to really look at this for every student athlete. But of course, it adds another level of complexity if they also have NIL income. So you want to take a close look at the split here between qualifying and non-qualifying scholarship use for your student athlete. Now, the new thing here is institutional revenue sharing payments. So the 2025 settlement permits institutions to directly pay athletes a portion of the sports-related revenue. So we took in $100,000 in licensing fees for putting the logo on shirts and uniforms, and that team is going to share a portion of the $100,000. Now, the precise methodology for the reporting is not specified. I could not find any IRS guidance on it, but other than we know it's taxable, right? At some point, hopefully something will come up. Some of this will get standardized, and the larger schools will do this. All 50 states allow name, image, likeness payments. Most are even going to allow college and high school students. Almost every case, there's going to be no tax withheld. It is legitimately 1099 income. They're correctly classified. So maybe 8 different complex layers here. If you count the SE income, royalties, non-cash, fair market value issues, multi-state nexus, good Lord. A lot of things here. You know, somebody in Oregon, right? You can file like the Eve, Marisa, some of you folks would tell me it's like 9 tax returns. If you're in the right 2 counties, you might have to file 9 separate tax returns in Oregon to pay all these new business taxes. These, depending where the stadium is, depending where they play, or depending what shopping center they go to help open, these folks may have to pay some of those taxes. And trust me, the government is watching because we know who they are. You see it in the media. That's the whole idea. So we said, what can one of these folks bring you? Self-employment income, royalty income, and non-cash items, which is why you want to ask. They may not have a 1099 for the use of that car, but you saw it on TV. You saw the kid drive up in it, you know? Multi-state nexus. All professional athletes have multi-state nexus. It's funny. I had a referral from another CPA who had a case of a professional football player who had an audit from New York State. And we were having a discussion where I said, okay, New York has to have a revenue ruling on how you split. All the states have to have it, right? Because they've all worked this out where your guys play in my city, my guys play in your city, New York, Philadelphia. It's all been worked out how you're going to allocate it. Sure enough, we found 30-year-old ruling that talked about how the income is allocated between New York says between what's going to be taxed here and what's not. And then look at this concept of duty days. Well, duty day basically is the team said you have to be in town, you're in town. So what was ironic with this one fellow is the person who did the return had used the wrong numerator. And basically, the guy had used wrong denominator. So my point is that the number would be smaller had he done it correctly. So I said, here's what you need to do. You can pay us. You can do it yourself. And this guy is screaming at me, 8 is bigger than 4. How can that possibly help me? And I'm just like, trust me, buddy. I'm glad you're a pro athlete. But I don't know whatever happened after that. But the point being here, this stuff is already figured out. You just need to identify the issues and do the research. So some of these folks, yeah, they might be filing 8 or 10 tax returns depending where they play. Now, it was interesting, the New York guidance did not seem to address the days spent in town postseason. So it'd be interesting to look at some of the state rulings. If I'm in the Rose Bowl, let's say, or some of these other things, do I need to file in those states? But it's all research. Folks should have some income. They should be able to pay you and get this. I think this is a great area, especially if you become an expert. Get 1 or 2 of these clients, talk about it, blog about it, video about it. You'll see other folks find you. It's powerful. I think it's powerful. So I won't bother you, but there's 8 action items here that could be very useful to you on how to set up a practice to do this. And I gave it to you over those 2 pages. All of these things came off of the National Taxpayer Advocates blog, the NTA blog. It's well written, a lot of content there. This could be helpful for you. I thought it would be interesting because it's March Madness, and maybe we would connect that back. It is a new and evolving issue. For those of you looking to niche a practice, this might be the way to do it. On top of that, have somebody ghostwrite a book for you, right? The NIL problem and my solution, something like that. And I really think someone can build somebody, somebody in Las Vegas or LA or Oregon. Where are there big sports cities, big college sports? And, can you get yourself out there as the expert? And I think you can. And it'd be possibly a great business. So you want to act now. If you think you have clients in your practice, act now to identify them, build systems to track the data, and ask the questions. This is going to be a very intensive interview. The fees for this are going to be higher than what you normally do. It's a new business person. They will not know what they're doing. They will have undocumented income likely, and it's just going to take a bunch of conversations and probably a little bit of internet research beforehand. Google the person and see. They were at this, they were at that, they cut a deal. You'll see it on there. They have a deal with this company or with that company. And you ask them, no 1099. Well, it's not like I got money. I eat there for free. I got a vacation out of it. Or my parents stay in their hotel whenever they're in town. Let's put all of this together, come up with the values. It's going to take a lot of teeth pulling. Get paid for it. Bigger upfront fee, bigger interview fee. Give them a memo. Tell them, listen, you paid me a fee for the onboarding and the research. Here's a memo. You want to go someplace else? That's great. You still need this memo. I'm helping you out. Please, 13th Annual International Tax Conference. If this is of interest to you, we'd love to see you. Me, Rita, Marina Hernandez, Andrea Valois, Frank Agostino. Be a powerful conference, a whole lot of folks. We do a bunch of different social things. We have an opening party that we take everybody to one of the rooftop bars in the area. So a view of New York City. It's fabulous. Love to have you there. And you'll get to learn something too. Hard work's going to pay off. So please, you're almost there. 19 more days and you're done. So work hard. Have a great weekend. Thank you again for joining us. It's always a pleasure.